Yeah, good morning, all. Yeah, this is our usual update, and we want to update on Euro USD. And there are a couple of things I wanted to see. I'm starting from where we dropped yesterday, last week, when I was talking about the breaking, understanding the break of the structure, how you break from, one to two breaks to three, and 4 breaks in 2, 5, and what we expect to happen afterwards, when we have an ABC correction. So that is what I'm still going back to. Assuming that we are in a trend, as we can see in this case, after 1 and 2 correction to 3 and 4, now the last, because like I said, on any time frame, when you break structure, you are breaking a structure of 5 with this fenestrated line. You are breaking the structure, but that will be too late for you to actually find an entry. So you have to look for a break of structure on 1 hour. In this case, for instance, if you are to also run this in 5 waves, it's going to go this way. 5 waves is going to go this way. Five wave is going to go that way. That's wave 1. Wave 2. Either correctively or impossibly, it could go up. Wave 3. Wave 4. And a wave 5 within that wave itself. Okay. Now, what we are saying is that if you scale down to 1 hour, assuming this is just 1 hour time frame, when this structure will be broken, it's when this wave actually breaks here. That is when you say, oh, the structure is broken. So when the structure is broken, what you're going to look for, you're going to look for a retracement to sell. So you don't wait until you get here. So you look for, this structure is broken. 4 is broken, then you don't wait until the 05 is broken before you begin to go down. So 4 already is broken, and of course, you know how to calculate the structure of 4 and to find out when it's broken. So it's at this point that it's broken that you know that, okay, the direction had changed for now, and the prices will only go up to do a pullback and to continue with the new direction, which could be an ABC or a correction. So now, with that said, I might be taking a whole lot of stuff off here to explain something to us. Before I do that, let me go inside here and show us something. There is a whole lot I want to show us, but let's do this first. Now, this was where we were last week, and we're talking of so many things, possibilities. And when I call this just permit me to quickly fix that. Now, this is 4 hours. I'm still going to go over it, but there's one thing I want to show us here. I want to show us quickly, because the most important thing is for us to understand, okay, where are we going? What is the price doing? So if I don't do this, you might not really understand what the price is doing. So we were of the opinion that the particular trend that was coming from up to downside has ended here, and that this is A and this is B, and that this is a C. So if I put that again, that this is A, this perception will change shortly. And I want you to understand how that would change and how to navigate. It's very important that we know this so that you don't just begin to lose your money anyhow. So we thought from here to here, it's an A, and from here to here is a B, and that this is a C. Now, if you look at it technically, it shouldn't be. If you look at it technically, it shouldn't be, because for this to be an A and for this to be a B, we should expect at least that this thing going up should not go beyond 123, because the price broke down the origin of A by just a few pips here. So it's the correction and the kind of graphics or the structure that we are seeing on Euro USD, it's a bit awkward. It's a bit awkward. So in our attempt to try to interpret structure, at times, you have to look at the DXY. The DXY, tells you, oh, this is what dollar is doing. This is dollar itself. So you now look at other structures that you are trading, because Euro USD is not exactly, at times, the inverse replica of DXY. So, but I'm still coming to, I'll still go to that. So if you look at the extension, because if this one had gone below 123 extension here, between 123 and 161.8, then we can say that, oh, this one at least will do 123. But even at that, if you say that it's going to do 123, 123 123 actually should have stalled here. I'm going to use golden yellow for where, or yes, golden yellow for where I think it's supposed to have stalled. 123 ought to have stalled here. That's one. Then, if you say you are in a new trend, before you can say you are in a new trend or you are broken under structure, 161.8 should have stood its ground, which is here. Okay. So now that's 161.8. This is 123. This is 161.8. That was where we first got a pull and a reaction. And eventually they did a correction to finish this. And price now is coming down. You must understand what price is doing here. You must understand it. Price will always give us a lead. You know, we didn't have price, doing a C here. And to me, this does not look like a C. Now, let's do something again. Let's do something again. The whole movement started here. That's the whole correction started here. Now, it started there. If I may use black for that as well. It started there. Then what we were expecting is that the correction, if we are to turn down, and this one will be A in the red, B in the red, and C in the red. Now, we'll expect a retracement to the upside of between 50 and 61.8, but not more than 76.4. What has price done again? Because we need to put all these things together. To understand what the price is doing. So I'll be using blue for that. We were expecting price to back down around this level, which is 50. Price didn't do that. It broke it. So because you have to wait for what reaction you are seeing at those important fib level before you even think of engaging the price. So price didn't do that. And where the price reacted at first was exactly at 76. So if I will probably now use blue for this, turn it to blue and break it. Because that's 76. That was the height here. And of course, it coincided with 161.8 that we did of a retracement or extension of A to B to C. It coincided with it at 76, and we first got a reaction there. But now price broke it. So you don't think that price will just break this fib level and will continue to go down? I don't believe that price is going to go down and break this again to the downside. Now, that is one. Price does not just violate things, but the price, when it does this, is probably trying to fool and confuse people that does not understand how structure operates. And you think it's going to be all the way a sell. But we're going to wait also to see what this is going to do. And I will be telling us in a short while. Now, let me quickly switch to DXY. DXY. Okay, let me go to where I've probably worked on. Yeah, that's the DXY here. I've worked on this one. Unlike the other one, this is DXY. When it corrected, this is the old move that we did. If you may understand that, I want you to really understand it. Let me just zoom out. Now, this was the height and the price corrected. So this is what we call A in the red. This is what we call, where we call A in the red. And we thought this is going to be a B in the red. A B in the red before we turn down to do a C. Just like we saw in the DXY. Now, so this is the correction. We thought we'll still do that. This will be an A blue, a B blue, and a C blue before we go down. So we thought that this will be an A blue. I want you to understand that. Now, so A red, so we thought that this will be this blue here will be an A blue. That move will be an A blue, and that this will be a B blue, and that we're not going to still come up to somewhere around here to do a C blue. That was what we thought. So we're going to come somewhere around here to finish up with a C blue. Okay? And that the O movement from, we were thinking that the O correction that we would have gotten, let me change this to black. This is where the price made a descent, and this is the recent, the most low for now. So we were expecting that price would at least do a 50 or a 60. And a 50 would have been here at this point on that daily time frame. That would be a 50, and a 61.8 would have been here where we expect C. So would have been here. So a 50. So we expect that, okay, B will go to this area or this area before we turn down to finish up C in the red to the downside before we turn up. That was what we're thinking. But again, we have to pay attention to structure and what the structure is telling us in the middle. So we understood how we got there. We didn't even do, if I go back to it, we didn't even scratch a 40. This is where a 40 is. This is where 38 is of the entire structure. We didn't even get to 38. We didn't even get to 38 talk less of 50. So that it's telling us something. It's telling us something. So now that something may have changed. Now, the way I explained Euro USD the other time, let's come back to this one. The way I explained Euro USD. Yes, let's come back to this one. Now, this is what we think we want to correct, okay? This is what we think we want to correct to the downside, this move. And the movement to the downside also, in our movement to the downside, before we say we are going to turn up to do to finish a C to the upside then before we turn down in the blue. Now, this is a 50 here. Price broke a 50. Price also broke a 61.8. Price made a reaction at 76. Let me so price seems to probably have made a reaction at 76 and broke it a bit. So that is a change of a structure. It doesn't agree with what we know. When a structure is broken, you have to know that structure has been broken. Now, when we look at the way the correction was even coming down in between these correction down to turn up, if we look at it, we saw that unlike what Euro USD did, this was still a perfect structure because in the Euro USD, this B came down to broke the top, but it broke the bottom. So that is the B broke the bottom here. So this one still worked perfectly, telling us, oh, this is A and this is B, which is within within 61.18, 61.8 or 76. So which makes that, okay, this one could be a zigzag to the downside. So if it's going to be a zigzag to the downside, we expect an extension of 120, 100 or 123. So extension of 100 stalled at where this black is, and 123 stalled at this red. So this one still looks more like a perfect thing to work with or ideal thing to work with than you are looking at Euro USD, because Euro USD didn't stall at 123. So this one still got to 123 and violated 123. So that's what I'm saying now. So let's look at how I did the extension. From here to the end of A, back to B, because these are where you put your alert for reaction. So this is 100 here, and this is 123 here, at the broken red. So, and if the structure of 123 is violated by a week, then you will not regard that this thing will still go up as we were expecting that it's going to go up before it turns down. So as a matter of fact, that has changed the structure of what we are thinking. Even though this one is going to go up, I don't expect this to go all the way to break this structure and to get to C. I don't expect that because this has been violated here. 50 was not respected. 61 was not respected. 76 was violated. Even though it ran in clear 5 waves. You can see it ran in clear 5 waves. Let's look at the internal structure. To me, it ran in 5. This is 1, this is 2, and this is 3, and this is 4, and this is 5. But even though it's stalled here, if it has pulled up and gave us a strong structure, this could have just been a 5, 3 and a 5, 4 here, and the last 5 maybe just be truncated. And if it has been truncated and falling short of where this one got to, somewhere around here, or at that level, without breaking this 123 or 76.4, I would have still agreed that even though it's going up impulsively and it's correcting downward now for one more leg up, I would have said that, oh, it would have been perfect for me to say, okay, yes, we are going all the way to do a C. I don't see that on the table anymore. I don't see that on the table anymore. Before I can take them serious again that they're going to do C, they must take 80 85.4 out. Without taking 85.4 out, I will not take it. I will not take it. And the whole assumption and configuration then had changed because this now had pushed this 123. Let me take the alert off. I want you to pay attention to what I'm doing. It's very important that you understand it. Let me now use a black. So it now shows clearly that we are trending, and that is not a B anymore. If we are trending, we are correcting, even though it looks impulsive, we are correcting to turn down. That's what it's looking like to me. We are not going up to do a C. That is what it's looking like. Let me take this alert off as well. I don't need those alert anymore. The assumption here has stalled. This eventually will be broken because this was within 3 to 4, which was correct, and here. So now, with that said, let's switch back to Euro USD, because that is what we are using to teach Euro USD. Anyhow you look at it, the structure, the whole movement, stuck with, agrees with 1, 2, very close to just a breach of 123.6 on Euro on DXY, and it broke here on the Euro USD. So 123, 161.8, broken. Now, what do I think? If I go to the daily, what do I think is happening? This is what I think is happening. And I think that the whole correction here is completely done. But fortunately, we would have thought that this is a 1 and a 2, and a 3 and a 5 of this. This might actually now be a wave 1. So we might be trending up. This might just be a wave 1 in the red, or let me use green for it now. This might just be a wave 1 in the green. We should not lose sight of that. And this may be a wave 2. This may be a wave 2, which stalled here. So after this move, this could have actually been an A B. Sorry, this could have actually been an A here. After this first move to the upside, this could have been an A B, and a C for this move. So that is what it's looking like now. That is what it's looking like. The move, this could now be a 1 of a new wave, which I can say like a 1 in the blue, This could be a 1 in a blue, and this is an A and sorry, this will now be an A, B, and a C, and that may have changed the whole thing. The A, the B, and a C, which finished this correction, and that we are going to go up for further upside. Now, in terms of reading structure, which is very important for us to see, if we are to turn down the more, I don't expect us to have broken this structure here, this one here. I don't expect us to have broken that structure here, which is at that level where we saw support here and resistance here. But this price had broken it. If this one end up closing like this on Monday or Sunday night, of course, it suggests a strong movement to the downside. That is what it's going to suggest. It's going to suggest a strong movement to the downside, but I think the most it will do is to take this one as a wave 1 and to do this one as a wave 2 before we go to the upside. Not until this thing coming down break straight to the downside, I won't trade it for a C. I'm not saying it's not possible, but considering that this had broken the structure, price usually does not behave that way. So I've broken this structure to the upside, and that they are coming down, you think they're going to go all the way to break this to the downside. You better think deep again. So what they can do here, we can only be looking for an opportunity to do what? To buy. That is what I'm saying, to buy. And that if you even look at what it is on the weekly time frame, on the weekly time frame now, this is the weekly time frame. This is the weekly time frame. See, the height of this had been broken just in this last week. It has been broken, and it has broken even here, which is the confluence of where the price got to. It broke it. So it's not just for fun. I believe we're going to have a pullback, and price may be going all the way to do more than this one had done. So if this one is seen as a wave 1 and we're looking at this as a possible wave 2, then which means that where we are heading is to break this structure. So it now may mean, I want you to understand everything perfectly. It then may now mean that the structure we are looking at, which is the correction, this correction may have ended completely. It may have ended completely, because when we see this move on a grand cycle, and this move came, now we are going to now see this as a triad, that this one had moved this much. This is where I take off some drawings for us to, I might have to take off those drawings now. Oh God. Oh God. Okay. I don't like taking my drawings off, but I still believe that you can get what I'm trying to say. Let's take this here, and let's use purple for that. Purple. Let's use purple for that. Let's use purple for that. So let's now use the low here as purple to see on the monthly, because we need to see what is playing out here to understand what the price is doing. How much of correction did we do to the downside on the grand cycle? How much of correction? Now, we got to like just around 85, close to 85 before this movement, close to 85. So I believe that if this one at least is wave one of the grand cycle, this could be a wave two, and that we might be doing wave three now, or that we're going to do a three-wave structure. This being an impulse, this being a correction, and another impulse to the upside. So what am I saying? What I'm saying is this: from here to here is the impulse in purple, and from that top down is the correction in purple. Then we need to see at least another impulse. This is going to take over 10 years. Okay. So this is what I believe that we are trying to do now. That is what it looks like now, at least. Of course, this one can be more than that. It can, if we are going to see if it's going to turn down between 123 or 161.8 in maybe another how many donkey years? Because let's see. That's the move here. This one started around year 2000. So from year 2000 till date, that's like 23 years. So, and it got here around 2008. So 8 years movement is captured here. Then from 2008 till 2022, that's like 14 years, if I'm correct. That's like 14 years. So 8 years to do this, 14 years to do this, probably are going to see another 8 years to get to do this 100. Because that's how we, now this actually is moving in a triad. If you look at what is doing here on the grand cycle here, is moving in a triad. It actually is moving in a triad. This is what we see. You can see here. Now, this is what we can see here. It's actually moving in a triad. This one came down and it broke structure. So this is more or less going in an uptrend in itself. It's going in an uptrend in itself. I think the best way to tend to this to look for the low here. To look for the low here. That would be the best to do, to look for the low here. That would be the best to do, to look for the low there. Oh. this is where we think we might get to. Okay, so looking for that low and cloning this trend. And that's the best we can see to see how price will make its move within that. So I don't want to do too much. Even if you are looking at this as a possible wave 1 and a possible wave 2 here, because that's another thing. That's another thing you can begin to look. This could be on a grand cycle or a super grand cycle, because this captured everything, but we don't have the data before now here. So we don't have the data at all before now here. Because we have to look which one is a cursor. The move to the down here is a cursor to the movement from here to this point. So we can't take it from here. So it's a cursor to the movement to this. For this movement, this one is a cursor here. So that's all that's the way we can look at it. And this can be a 1, an A, B, and a C, which is still correct for a 2 here on that purple movement, you know. But if it's going to change, we'll see what the internal structure is telling us. But that is what I can still go with for now, that we'll see this as a possible 1. This as a possible 1. And that we are seeing a 2. Just permit me to quickly do this before I scale it down. A 2. So if that is a 2, we are trying to say that we have the A of a 2, the B of a 2, and a C of a 2. Just using the available data that we have at our disposal. So this one becomes the A of a 2, the B of a 2, and the C in the super grand cycle of a 2. So in that case, it means that we are doing a 3. So this is a running flat that has given us a running flat here. And if actually we look at it from that top to that bottom, yeah, so it's up here, not up to 161.8 to give us a complete wave. So it's actually a running flat that it has given us to complete 2. Now, this may just be a 3-1, which is the first part of 3. That may just be a wave 3-1, a wave 3-1 of that cycle. So this may be a wave 3-1 of that cycle, and that we are doing A, we're going to do a B, we're going to do a C to finish a 3-2. So in other words, we might actually be seeing a movement. If that eventually is correct, we might now be seeing a movement where structure, before we finish that 3-3, we might actually now be seeing a movement that goes this way and take out more structure to the outside, which will, that's an 100 that we have, which will now tell me that price eventually may take out these to make it a 3-3. So that may happen. That may happen. But don't let us get ahead of ourselves. That may happen. That may happen. That may happen. That may happen. So, but don't let us get ahead of ourselves. We can only work with triad for now. It's better for us to see it in 3-wave, and we apply ourselves that way. So whatever is unfolding, the low here might just be giving us the 3-2 to expect a 3-2, then an ABC of it, ABC form out of a 3-2 before we climb up and break this structure. We'll see how we break this structure. If we break this structure, that means a 3-1, a 3-2 probably may have ended. So what we are going to see how we're going to break this structure before we move. So this is what is going to take more than 50 years to even get to this point. But let's work with this triad for now. Let's work with that triad for now. So having said that on the monthly, let me zoom on the monthly. So on the monthly, is yet to take out this structure. This is what we are aiming for now, to take out the structure in red that the bears forced the price that it did correction. So we are trying to take that out, that structure. If I look against this structure here, it has even taken out this structure. This has taken out that structure by a small pip. And on the weekly, we know clearly that it took out all of this structure. If the price were to do a double leg or 3 legs, 1, 2, 3 to the downside, it wouldn't have taken this structure last week. It has been taken out and it's gone beyond here. So that's why I'm saying that I think we have ended our downward trajectory and we are likely going to go more up. So which means that with what I've said here, in terms of a weekly, let me go back there now. With all that we have said, looking at this correction, which I called just now part of 3-2 now. So if this is 3-1, so if it's 3-1, so this is part of 3-2. So this correction that I called correction now, that we looked in line with like 5-wave structure, which is like a 1 and a 2 and a 3 and a 4. The 5 may have ended here. That's what we are trying to say now. The 5 of that correction may have ended here. And if that is the case, It might just be a C of it has ended here. A C of that has ended here. So we are likely going to see more upside. We are certainly looking like we're going to break this structure. That is what it's looking like now. So let's still go inside and look at what I said now. So we are broken this structure on the weekly. So I don't think that the price is going to come down to break structure to the downside. I think we are done correcting to the downside. And if I go to the daily now, with that at the back of our mind, so this is the correction, and the whole correction may have ended, and I think we are going further up. 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 So how are we going to deal with this that is coming down? We are going to see this. It's better for us to deal with it because we are having higher highs now. That's the way it's looking like. And after this low, and the bears could not push price further low, they may have just done this as an A at this level, a B, and a C, which is where it ended. A C ended here, and we have the first wave. As far as I'm concerned, the first wave and the correction of A, B, and a C within that wave, which is not different from what we had perused, and that correction, and we may be turning higher. Now, for me to take this that we are going to break down, this is what I'm saying. For us to say we are going to break down, we must take out this level. We must take out this level. Do I really need this for anything? No. We must take out this level of 85. That level must be taken out in red. So if price that is coming, take out this level, then I will now know that most likely we are going to break structure again. We're going to continue a C. But it doesn't look like it. Forget what you are saying. It doesn't look like it. Price needed not to have broken this in the first place. Price needed not to have violated 76 here, which is in blue here. Price had violated it. And this to me is a pullback on the daily. That's a pullback on the daily. How are we going to deal with this? What we are going to do to deal with this is now when I was teaching us taking out a structure, and when we know that either we are doing a trend or we are correcting an ABC, this move broke everything else, which had changed my orientation from A, B, and C for us to go more down. Because once we complete C here, it means that we are going more down. But then that is not what I'm saying now. Now this becomes a C here. A, after this move, this is the first move on this time frame now. The wave ended here, and this is the first move of one, a new move. So this is the first correction after that move, which came out impulsively, and this is the B, and this is the C. Okay. Now, this one now went up to break structure. I did mean that once this 1.8 is not broken, so we'll be telling ourselves it's not a new structure, it's still part of correction. be it on DXY, be it on Euro USD, it has been broken. In Euro USD, for correction that you know, 123 was taken out. Here, 161.8 was taken out. So now let's look at the internal structure of these. Let's look at the internal structure of this in itself. This is like 1, this is 2, and 3, and 4 here. This is 1. I'm using this for us to teach us a break of structure, because when you understand all of these things, you will not be on the wrong side. We can't control anything, but you can see when something is not aligning, and we want to choose which side of the trade we want to be in, one, and when and where exactly do we want to deploy. That is why we are doing all of this. You must be able to see what the big boys are doing on time, and you wait patiently until you are able to deploy 5. Now, this is 1, and this is 2. This is 3. This is 4 of 3 and 5 of 3. Okay. And this is the 4. And this is 5. So which finished that part of the possible wave 3 when this one is 1. So we are going to see more upside. That is what I'm seeing now. We're going to see more upside. Now, for us to have captured the movement here within this frame, we need to see that how to capture the movement right from here. You want to capture that movement right from here for you to understand something. This is just about understanding the structure and the break of a structure, because you don't wait until this O1 is taken before you say you want to join, because it's already too late for you to join. I'm teaching this for your own good, to understand how to take advantage of the market when it presents itself. Now, within the structure of 5, this one is completed 3, and to have done a 4. Within that structure of 5, so we want to break this 5 down. The 5 is broken down this way. This is a 1. A 2. A 3. A 4. And a 5. So we're going to fix that on the 1 hour. Here is the first move, a 1 on the 1 hour, a 2 correction here, and because an impulse, a 3, and a 4. This is a 4, if this fifth wave going up had been truncated below here, we could still be possibly thinking of a C up here to break down, but it didn't. And that is one thing you must see a catch, and that is 5-5. Now, when you see this, which structure do you want to take out first? After finished in wave 5, the structure you must take out first is this wave 4. Because 5 had gone up here, and this one is going to do in its own 15 minutes time frame also, it's going to do a 1, 2, 3, 4, 5. But you don't need that because it's going to mess you up. It's going to mess you up counting to, wanting to break 4 here before it's going to mess you up. It's better you stay at 1 hour to see how structure is taken. So the structure that is taken out here is this one on this time frame. If you had counted correctly, this is the structure that is taken out. Yeah. It was taken out by this. It was taken out by this. So when this one took it out, where you could have just pitched your 10 to say you want to enter, it's exactly at that level or a bit lower, 5 pips lower than that level before the next candle opens. That is what you could have done. To have entered here. Once you take out a structure, you look for what candle took out a structure, which in this case, this one took out the structure, and you would have probably waited here. Fine, you would have missed all these moves, but it does not really matter. It does not really matter. You may have missed all these moves, but it does not really matter. And that's about 76 pips. It does not really matter. But this structure has been taken out, and we are seeing a potential ABC. That's what I may say now. And again, this price is going down. It has erased the first part of wave 3. The whole of even big 4 is gone. This is the internal structure of 5 here, which is 4. This is the first place that tells you something is changing. So you don't have to wait until this whole 5 wave is eroded before you know that something has changed. So you would have probably gained another how many pips from here if you had entered maybe about 137 pips. You would have just been. So if you know how to work it out when you count, when you count. So I'm teaching us a whole lot of stuff for us to know. This is the way I see wave, I see structure, and how we want to trade it. That's the way I look at it. Now, so looking at this one now, something had changed. Like say, this 76 was broken. It was broken. And if this had not happened, this is an intention. Even if you look at here to here, let's look at the RSI. See, RSI agrees with it because if this is 3, this is 3, the 5 is below 3 here. So, of course, in terms of pips value, it went up. But on the RSI, you can see it falls below it. So it agrees with a 3 and a 5. So that's a 5. That's a 5. So on the RSI, and this is coming down. So this is coming down. This also seems to be coming down impulsively. So because it's coming down impulsively, don't let it confuse you or think that, oh, it's an impulse, then we're going to break the structure to the downside. This break of structure on the daily time frame, for me, supersede whatever that this one is doing. So what do I see? I see this move in 5 waves already. I will change that to blue, where the new moves. I already see that in 5 waves. I'm teaching us, I think it's good to teach than just to give you a quick recap that you won't even understand, and you get everything muddled up, and you say, okay, what are they teaching? This thing is it's not making sense. Actually, it's sensible, very sensible. It's only when you can see, but if you cannot see, you cannot see. So this is one here, rightfully so. And this is two. When this movement is taking place, you don't know. At one, structure has not been broken. At two, structure has not been broken. It was three that broke this structure. So wave three broke that structure, and wave three, for me, has ended here. And this is the fourth wave. This is the fourth wave. And we need to see the fifth wave. We need to see the fifth wave here. The fifth wave may break the low of this. It may be truncated, but we need to see that fifth wave. So that's what I'm saying now. Now, looking at this structure, is it like that? If you measure from here to see what retracement we have for two, this is over 61.8, which is correct for two. Then for three, in terms of extension, it must be greater than 161.8 from this origin of one to the end of one. To the end of two here. So the 0161.8 actually was here. So this couldn't have been, three would not have ended here. That's how to interpret it. So you can say, oh, if you want to say this is three, no, it's not. Three didn't end there because this 1.8 was actually broken by this candle. So, and we've done 2.6, and we are almost at 3.2. So which means that this one qualifies for 3. So if this one qualifies for 3, so where do you think 4 should not break? From here, which is 2, to where 3 is, it means that a new structure that would dictate price is around here, which is 40. So which I'm going to code in red. So when you know this thing, then you know it. If this red, by any reason, is taken out, and we have a move to the downside, it's only a pullback for more upside. That's how to interpret it. So for now, we are waiting for this wave to finish itself until this structure is taken. So once 4, as you have 4 taken out here, once 4 is taken out here, then you are going to go up temporarily. Do I want to trade it? I don't want to trade it because I might be saying that as a B for us to have a C wave to the downside before we turn up. That is what I can see for now. So in that case, I might be saying that this may now look like we are seeing a wave in the making to correct the entire move that we've had so far to the upside. And we are going to see a B, and we'll be looking for a C later. We'll be looking for a C later. We've not even done a B. That is what I can see for now. Now, an A. Where do I think this A can get to the limit of this A? The limit of this A with what we have here, this kind of a reaction to this point, I think the limit of this A cannot be more than 1.68 to the downside. So between here, which is 1.68, and here, which is 123. I don't think we cannot move past this level before we see B correcting. I don't think that B is correcting. All right, B is not correcting for now. We are not done with this. This is just this is just a 3 here. This is a 3 here, which we need to get out of the way. That's a 3 there. So we are going to 4. We must not break this. If we break it, then 4 is out. In terms of RSI, do we see anything? Okay, this still looks more like a 3. You can see the movement. It looks more like a 3 here. So we need to see this. This, you can see when it broke down the 2 and the 3 went below the RSI here, the RSI, the price line, which is correct. And this is moving up. And if by the time this one turns down, of course, the price may be truncated here or push around this area. Push around this area. So if that happens around this area, then of course, this, of course, will not erase 3 momentum here to tell you is actually 5 before we turn out up to do a B. So that's what we are looking at. By the time you are looking at your trend line to guide you, price may have sailed more deep to the upside before your RSI can even, before your trend line can actually tell you. But when you see your trend line broken, it just tell you the limit of B or about the limit of B that the price is going to turn more down. I don't think, if it has come down in 3-wave pattern, probably without an impulse, I may have said that this should be enough to correct the old move to the upside, and that we're going to turn up almost instantly. But I don't think so. I don't think so. I don't think so. We need to see this taken out now to signal the end of A. So for this to have moved down this way, it can only be a zigzag movement to correct these 2 before price turn up. So wait for B to finish, and once price is coming down again, that is how we have to look for your entry to buy. And when you are buying, of course, buy small, because of the potential. This is where price must not break. This is where price must not break. So we are looking at a potential blue zone now. This is 85 of the entire move. This is 85 of the entire move. So let's do it again. With that kind of a deep trust, what do I expect? That's a deep trust. With that kind of a deep trust and a wave, this is 85 here. And the price had broken 50 already. This is 76. This is 76. And this is 61. I think price is going to eventually take out 61. This is very deep. This movement is very deep. It's very deep. So what I expect is that I will be interested in what price is going to be doing, the movement of price in this area. I'll be interested in the movement of price in that area, and I wouldn't expect price to go beyond this area. So more or less, I'll be looking for price to buy in that area, and I wouldn't expect price to go below this area. So that's what I'm saying. So let's see, we might be having a more deeper correction to the upside. This one has not ended for me. It may be truncated, but we have to see price below here for price to turn more down. Once this is taken out, we are in B. Once B is taken out, we're going to turn down to do a C. And once C is out, what I expect is this move. I expect this move. I expect that move. At least, I expect the move that will be more. Once it's more than this move, it's telling you it's an impulse. Once it breaks that, it's telling you is an impulse. I should even use blue for it. Wherever I get to, we don't know where it's going to get to. Maybe it's going to get here. We don't know yet. So that is what we are targeting. We're targeting any movement around. Let me use blue for it, so it won't confuse you with the trend cycle that I drew the other time. So we are expecting something that at least once we bounce off, we're going to have over 400 pips to the upside again. So if you are in a sell, for now, you should have probably put your stop loss around this area, around 90 of this entire move. Put your stop loss there. If you're selling, look for price to return and bounce off and go more deep. Take your sell out and plan to enter your buy. So if you are taking out and price should break here, then we are going to turn more down and break structure to the downside. But in terms of structure, it's not looking like that to me. That is what I'm saying. I think with that, I've come to the end of today's video. If you have questions, always put it in the comment section. That will know how to address it on the subsequent videos if you're going to do it. We're going to see. So because this is another potential place, once price gets here, we might see a breach, then a correction for more upside, when that happens. But for now, let's just be done with this ABC, A, a B, and a C for more upside. That is what it looks more like now. So to buy until 85 is taken. So that means in our sell, we can still purge and get out around this area if price gives us that, and look for a setup to buy from here. And if price breaks this, then we are going down the more. So, and that will still be cool anyway if we're going to go down the more. So we'll look at it. So, all right. Have a great week ahead.